Hello, welcome to the Stock Out. This is your show at FreightWaves for all things related to the CPG and retail industries. I'm Mike Bowden-Distel, joined by Grace Sharkey, and today we're going to be talking about Kellanova, which Grace, you should be an expert in since they're from your home state of Michigan. We'll also hit on Ozempic's potential impact on CPG, talk a little bit about Amazon, and then we're going to interview Ed Smith, Vice President of Distribution and Fulfillment at Averitt Express. We're going to do all that in 26 minutes, so we're going to have to be efficient. But before we do all that, I would like to make sure everyone has a chance to sign up for the Stock Out newsletter. If you haven't done that already, you can go to www.freightwaves.com/the Stock Out. There it is. Go to freightwaves.com and right up there under newsletters and the Stock Out. You receive that every Wednesday or Thursday based on what's happening in CPG and in the retail industry. And with that as a little bit of an intro, I want to get into the first news story here. So Kellanova and W.M. Kellogg completed their separation. Grace, what were your initial thoughts on this? I know you had some thoughts earlier on FreightWaves Now.
Yeah, it's well, I think you and I are both are not surprised that they didn't do the plant-based spin-off too at this time. It sounds like they wrapped it up into one whole, which I think was a smart move. The name is interesting. I will say I did more research and found out that it sounds like it was voted on by the company. There's some type of inside contest to come up with a name, so I'll support it a little bit more because of that. But overall, the market isn't too fresh on it. I think what we're really seeing here is the obstacle of snacking, right? We're seeing a lot more businesses around the snacking industry struggling. We have this, they brought this up in ConAgra's call as well, but this anti-obesity or food suppressant type of drugs that are becoming a huge thing. People are looking to, of course, watch their weights and be a little bit healthier, and snacking is the easiest way to cut that out and to focus on that. So I think we're seeing the market point that out here in this time. I think long term we'll see it definitely bounce back. But it was surprising to see and still see its drop in the market today.
Yeah, so there's a lot going on there. I mean, I think part of that drop there, I think the biggest part of it is the fact that they just spun off that North American cereal business, which what's interesting is we sort of look at so the existing shareholders got the spin off of the North American cereal business, and it was interesting. It's just looking at the sort of the relative market caps of the two companies, and one of them was what was it? I'm trying to get my notes on the right page here, but $17 billion in market cap in Kellanova and less than $1 billion in market cap for W.K. Kellogg. So it's clearly the snacking portion is what the market seems to like, and I think that was really the justification initially for splitting the companies at the time into three companies, where you had three different investor rationales, where the North American cereal business is kind of that steady as she goes type business, good cash flow generator. That North American cereal is on a decline in terms of just sales. Fewer people eat cereal for breakfast than they used to, but snacking, for all your concerns there are valid, but a lot of the companies view snacking as being sort of one of the growth areas within CPG, and some of those companies seem to be making it work pretty well, like Mondelez. Mondelez is the one that owns Oreo, Ritz Cracker, premium saltines, et cetera, et cetera. They bought Cliff Bar recently, so that one has done well and is diversified into some of the healthier categories, and that one's trading at almost 19 times forward earnings, and this Kellanova valuation is about 14 times forward earnings. So there still is a pretty significant gap there in terms of valuation. And I think the rationale was you split those three companies. The North American cereal business will be for that sort of dividend investor, maybe a retiree likes to clip those coupons. The snacking business for kind of a growth at reasonable price investor. Most of those segments are growing in at least the high single digits, if not some of them are in the double digits. And then there's that clear rationale for expansion in the international markets because those are primarily North American brands, but it doesn't seem like there's any reason why you can't sell those brands internationally. They do a lot of that, interestingly, with Pringles, where they have Pringles taste localized for various markets around the world with a lot of flavors that you just wouldn't appeal to a U.S. Palates. And then the plant-based business at the time, there was a 16-month time difference between when deal was announced and the completion. At the time, the plant-based seemed like it would still might really be sort of the next big growth area, and that hasn't panned out. So that was maybe for an investor that was a little bit higher risk tolerance. So, some of this financial, it was just kind of financial engineering, and it didn't really pan out. But I think it's still sort of Kellanova still seems like a good investment, at least to me, when you sort of think about how much some of these other comparables are valued.
Yeah, I would agree. I think long term, it's gonna clearly come back and not be an issue. And I think there's just some different trends in snacking that we'll probably likely see them jump into as well. The talks of right, like smaller portions and things like that. So
Mhm, mhm,
yeah, I
mhm.
agree with that analysis as well.
Yeah, they said something interesting as well in terms of kind of consumer behavior. And then the recent analyst call where they talked about just sort of the elasticity, where the volume was down about 4.8% in the first half, and that's on a 15% increase in price and mix. And so there is a little bit more, I think, elasticity if you sort of think about that as being a response to higher prices, that consumers are being a little bit more cautious with some of these items that are a little bit more discretionary. And then you bring up interesting point on all the Ozempic and similar products. That's something that go back a few months and just all of a sudden it's like went from never having heard about any of these things to just it being kind of every place. I think the first time I ever heard about it was, I think there was a joke on the Academy Awards that everyone in Hollywood was using it, but then like as soon as that happened, there were just constantly articles about this. And some of the stock analysts, I think, have an unenviable job because they have to quantify something, the impact on stocks that are difficult to quantify. And so, no doubt, they're getting questions of like, well, what does this mean for companies' market cap that sells snacks? And some of the things I've seen recently that some of these companies have tried to put a number on it. So Morgan Stanley says that currently 1.7% of America's population is prescribed to one of these type of drugs. Walmart says growing extremely quickly, of course, fastest growing portion of their business. They also say it significantly reduces intake of high foods high in sugar and fat. I guess it makes people less hungry, and so they get told that if you take this, you really have to focus on nutritious foods and sort of eschew any sort of candy and stuff, because I think a lot of people who take these things lose a lot of muscle mass also, and lean weight, which they try to avoid. But then some of the thought from Morgan Stanley was that they thought that maybe 7% of people could be taking the drugs by 2035, which it's hard to pin that down. That's where you have a lot of risk into an estimate. But it was interesting that Walmart just said that the users that buy those drugs at Walmart consuming about 20 to 30% fewer calories. Assuming that that's what they're buying at Walmart is what they're eating. So smaller basket sizes, and it does seem to be having a significant impact on their other types of businesses, at least for those customers, and they can see what the customer behavior is for consumers that are buying Ozempic or a similar product, and what their rest of their shopping behavior is. And you sort of put that together and say, well, if Morgan Stanley is anywhere close to correct, that 7% of the people are reducing their eating by 20 or 30%, well, then maybe it's not that big of a deal. And maybe only the consumption of snacks decreases by 2 or 3%. But, the risk seems, at least to me, that they're underestimating the potential impact of how many people will eventually be on a drug like that. But on the other hand, they could be overestimating it if there's some bad side effect or that we just don't know about yet.
I think that's the kicker here is to be very frank, there's people who are on the drug who are on the drug for serious health reasons and diabetes
Mhm,
and things of that nature. And then I think I don't know what percentage, but I believe there's a good percentage that are on it for just the weight loss aspects in particular. And I would not be surprised if we do start to see more of a pushback on whether or not that it's healthy or even just more
mhm,
control or regulation over the drug.
mhm,
And on top of that, too, I there are people that I know that take the drug for diabetes purposes who are still snacking at pretty close to the same level they were at before, or just a tad bit less. So to say that those
mhm,
individuals will be 100% healthy, uh, well, that's not really what got them there to take the drug to begin with either. So we're talking about some huge, huge consumer changes of people taking it, plus a lot of fingers already pointing at it, regulatory wise, saying that this is not good and we need to figure this out as well. So it's something I think we'll have to watch, but like I said, it sounds like there's already options out there, whether we make smaller portions or, of course, use better ingredients, etc. This might be the chance for the plant based snacks to take off too. So
mhm,
I
mhm.
think it's kind of a watch game in that matter right now.
Yeah, I mean, clearly it's something that CPGs I think are looking at and doing things like making smaller portion sizes, maybe trying to change the formula of some of the products to make things, maybe more nutritious with protein and those things. So definitely something people, it's something to watch. A lot of uncertainty there. I think maybe a risk to both sides now that the CPG stocks have maybe underperformed this year. A lot of them have. I want to move into our next topic, and this is a big one. We could do a show just on Amazon and Amazon alone. Probably warrants its own show at some point. The last two newsletters I wrote about Amazon. Um, there's a lot. There's a lot that's interesting in this FTC lawsuit with the 17 states attorneys generals. Have you had a chance to go through much of that?
I've gone through like the initial case that it's touched on and a lot of the opinions here and there. I think that uh, uh, I think I disagree with some of the pushback. I think right now well, a lot of what you and I report on, especially what I report on a daily basis, is the technology that's competing with Amazon or
Mhm,
companies like Walmart, right, who have their own third party selling platform. So uh, whenever this comes back to this whole monopoly pricing situations, for me it's tough because there's so many different options that sellers can go to say that your
mhm, mhm,
handheld. But also, then we can talk about this too. A lot of the great perks that individuals are getting being a part of the Amazon fulfillment network when it comes to pricing on packages and delivery times, etc. You're leveraging a lot. So it's for me. I'm probably against what the average consumer might feel towards Amazon. Uh, Seeing that it's like again, I report on this every day. There's so many different options uh, that
mhm.
people can go to. Yeah.
Yeah, I mean, I mean, it's certainly it's like if the consumers if the consumers are really getting taken advantage of by Amazon, they don't seem to know it because like you look at the Amazon Prime, people don't stop subscribing to Amazon Prime very often, and the satisfaction rate's like 91%. But I think the bigger issue is maybe on the supplier side is it virtually impossible to make a profit on Amazon because you have to pay so many fees, you have to buy advertising, you have to use their fulfillment center to qualify for Amazon Prime. It does make it very difficult for CPG companies to earn a profit, which is next week's show. We're going to dig into this closely with Chris Moe, CEO of Cartograph. So I'm going to leave most of the discussion for him. He knows it better than we're ever going to know it. And with that, I'd like to move on to today's guest, which is Ed Smith, VP of Distribution and Fulfillment at Averett Express. Do we have Ed? There you are. It's a good headshot nonetheless. If you're not there with a camera, thank you for joining us.
I'm here. Thank you for
Not
having me.
Oh, great. Yeah, fantastic. Yeah, happy to have you. And for those not familiar with Averett Express and the distribution and fulfillment services they offer, can you give us a little bit of a rundown, please?
Oh, yes, sir. So Averett Express, primarily we're a transportation logistics company based with an LTL model. That's what we've done for the last 50, 52, 53 plus years. And what's been great for us is we started building a distribution and fulfillment network somewhere around 5 years ago to continue to service our customers for all their needs. So it's been a wonderful thing for us to add to our portfolio. It's the fifth vertical in our company. The first vertical that I spoke of earlier was our LTL platform. We've got our truckload platform, we've got our dedicated group, and we've also got our integrated group. So out of all those assets, we're able to give customers everything they need. So it's fit really well into our entire platform.
And I'm sure customers are enjoying that network as well. Can you tell us why Averett decided to push outside of just the LTL market in particular, and really focus more on its fulfillment and distribution services? Oh, can you hear me? Oh, Ed, can you hear me? Okay. I think we might have lost him, Mike.
Yeah, one of those days, I think.
Yeah, right.
Hey, I'm back. Hey, I'm back.
There we
Okay.
go.
There, I can hear you now.
Okay, perfect, Ed. Oh, I was just asking. Of course, it's great for customers of the LTL service, the expansion of everything now within your network. What pushed for that? Why was it important for Averett to go outside the normal LTL capabilities?
Well, like every other company, we like to grow. We like to see what our customers' needs are, and then from a sales perspective, we want to listen to what they're saying. And in all of this information and dialogue we're getting back from our customers, same thing kept coming up back in 2015, 16, and further. It was more about, hey, what else can you do with my goods? What is the earliest point you can grab hold of what we need and then distribute our goods? And really, with a portfolio like we have, including our international department, we start from a pure port side standpoint, where we grab goods as soon as they inbound into the United States, and then we start putting that in the supply chain wherever they see fit. If you've got product coming into Houston, or whether you've got it coming into Jacksonville, if you've got it coming into Charleston, or wherever the case may be, we've got the infrastructure in place to grab those goods off the port and bring them into a warehouse distribution model and send them wherever you need to. Whether that's a simple transload onto a 53-foot dry van that takes it to distribution centers, whether it breaks out and goes to just your storefronts, and then last but not least, we're all the way into e-commerce and direct to consumer. So I think that was just the natural maturation of the entire process when you listen to your customers. It's for me, it's the organic growth from an LTL perspective right into everything else that our customers are needing today.
Yeah, it makes a lot of sense. You mentioned that you built your fulfillment network out about 5 years ago. How have the needs that the shippers have changed during that period of time? I mean, you hear so much about omni-channel fulfillment right now, and just speed to customers to compete with Amazon. What have you seen on that?
Yeah, so it's a great question, and right now we have right around 3 million plus square feet that we distribute across our Southeast platform, and within our network, what we found, and it's changed from the first conversation we had through COVID and through today, all of this changes pretty much on a dime, just as customers need. But your point is, I think the key word we heard years ago was micro fulfillment, right? That was the thing that got it closest to the end user and the consumer. We still hear a lot of that same thing, but now it's just in multiple micro fulfillment centers. How many of these places can you put up, and how many of them can you have to to best suit our needs to get speed to market. It goes right back to the conversation our customers have. Post-COVID, you see the conversation turn into, well, I don't know exactly where I'm going to source my products out of, and I don't know exactly where I'm going to bring them into. But what makes the best sense is, how do I bring it into the port that's closest to my demographic? Where are my end users and consumers? What do I need to do in order to gain access to that port? What vessel sailings come there most often? And last but not least, what can you do once they land and get into the U.S.? Where can you put them? And that's where we stepped up. We continued to add facilities, and our main facilities stretch from Dallas to Houston to Memphis to Louisville to Nashville to Atlanta to all the way to Charlotte. And then we've got other smaller fulfillment centers that tailor all the way around our seaboards, whether it's in the Gulf or whether it's on the East Coast or wherever it is. But we continue to have more and more locations that give our customers more options to get goods closer to their end user and consumer. Now, competing with Amazon on a model where I'm going to deliver it this afternoon when I pick it up same day from an LTL, palatable large shipment, I'm not quite there yet. I don't know if they got the beam me up Scotty that we can get to someone's front door yet, but we are very, very good at getting goods transferred from port to warehouse and then to end user as quickly as possible.
I want to go back to the sourcing aspect that you brought up as well. I'm interested, of course, with all the talks, and we've seen so many companies coming back to North America and just looking at their different options in particular. What kind of trends have you seen with your customers on those sourcing questions and capabilities recently over the last the year or so?
Well, we hear from our customers the same thing you read in your articles that you publish, and that is nearshoring is a conversation that everyone's legitimately having. And that is just so people can feel more comfortable, in my opinion, so beneficial cargo owners can say, I've got a tighter grip on my overall transportation and logistics, so that it's more controllable from a cost standpoint, and B, it's more controllable from a standpoint of getting it into the country and then distributing to a customer. So you've definitely heard more about South America, but you've really heard a lot more about Mexico. We've got a wonderful person, our vice president of sales over Mexico, a gentleman by the name of Ed Habe, does a wonderful job of keeping the pulse on that side of things for letting us know what's going to come in the future. And what's interesting, what you start to hear from a nearshoring platform is, what are my options and what does that turn into? If we start manufacturing XYZ product in Mexico and the land bridge gets more and more full coming up through Texas, what are the options? And there are other options, and there's a lot more going on and a lot more conversations happening about vessels now carrying and not just being locked in the land bridge. So if your consumers are mostly on the East Coast, east of the Mississippi, you could log that into Mobile, you could bring it into to Tampa, you could bring it into Miami. There's a couple other options that you can use now from a vessel sailing standpoint that will get you into your network pretty much as quick as the land bridge is going to do. And I think customers, and then that turns into other conversations. They might not be coming all the way to Mexico. It could be Turkey or Pakistan or wherever that next move turns into. But from an international scope, having all the facilities we have strategically placed through that Southeast gives every one of these customers an option to bring their goods in and us be able to handle it from A to Z, everything they could possibly need. And for me, I think that's a beautiful blend for them to be able to see what my costs are and how quick is my speed to market. And then I can hold one carrier, one partner accountable to helping my supply chain prop up and get its goods to its customers. So I think the conversations are going to continue to, I think they're just going to continue to grow. Who knows what the next boom is going to be, but I think people are definitely looking to nearshore or have some more assurance wherever they go about what's coming out and how they're going to get their product.
Yeah, I would agree with you there for sure. I also wanted to ask you on just on inventory levels. I mean, you have unique insight into that. I mean, we hear different things from different people on inventory levels. Some people say they've been right-sized. Some people say they're still a little elevated. Some people say, well, case-by-case basis, it's kind of mixed. What are you seeing on inventory?
Yeah, it's such a tricky question, right? So first and foremost, consumer spending has changed. We all realize that. So do the beneficial cargo owners and the major manufacturers and the big box retailers. Everybody kind of understands that the consumer changed the way it's spending things based off of post-COVID. And call it whatever people want to call it from a financial standpoint. It's just a change no matter what. Now, you make up a good point. Necessities and small parcel inventory levels, I think those continue to flow a little bit more. I think you see Amazon still having decent amount of orders and decent turns, but it's products that people tend to need and not so much want. And that's still interesting. But when you look at from a standpoint of expenditures on larger items or items that might have non-necessary needs, those tend to sit. And I think some of that inventory has leveled off a little bit. I think some of it's still sitting kind of high. But, the one thing everybody's looking at right now, and what we hear from the ports and what we hear from cargo owners and retailers are, everyone had a mini, what's called a mini peak season from an ocean standpoint, where they bumped up a little bit, but they weren't over ordering and they weren't over allocating inventories just in case. What they're wanting to see now is what does the consumer spend look like from now until Black Friday? What does it look like post Black Friday into Christmas? And then that, I think, is going to really give us a good gauge on what we look like post Chinese New Year next year. And I think it's just too early to tell and too unclear for all of us to understand. But from an inventory level standpoint, some of our warehouses are turning product and some of it's sitting, again, just based on consumer need versus consumer want.
Yeah, it's really interesting. We're all really focused right on what the demand will look like for the rest of the year. I'm interested, Ed, as you continue to build out this network and all these really incredible initiatives. Where's Averitt focused on right now? Is it building more warehousing units? Is it the technology behind it? Where's your focus on improving this incredible network and really this capabilities outside of just LTL?
Well, so outside of LTL, you start looking at, when you speak to me as the vice president of our distribution and fulfillment, there's a couple of areas that we're going to focus on really hard right now. And first and foremost for me is the platform in which we operate and the KPIs that we look at, the labor analytics we look at, and then, believe it or not, business intelligence from an AI standpoint. Artificial intelligence is going to get bigger and bigger from a business standpoint. I know when I say that out loud, people think artificial intelligence. I think a lot of people relate that to their personal lives, but from a business aspect, the more data we can capture on our platform that actually helps us understand where our costs lie, where the savings lie, what our customers are looking for, all of that turns to just an easier way to quote, understand, and react to the ever-changing and quickly changing markets, right? So from an AI standpoint, we have to be on the forefront of that. And we lean on our partners that we partner with from a warehouse management platform standpoint. We lean on them to say, look at our data. Are we capturing everything we need to capture? And does it give you the analytics you need in order to create a bigger AI tool for us down the road? So for me, that's first and foremost, because if you're not looking at that, then I think you're going to be missing out on some really golden opportunities. The second thing for that is to continue to grow based on customer needs. We see pockets in our platform in the Southeast, and that interest us greatly, and we continue to invest in those markets. We are heavily looking at what looks like the next best trend for us, and that's based on years and years of experience, not just the 53 years in the LTL and transportation world, but also in the dedicated and the integrated and the international, and now in the distribution platform. I feel like we are poised to be set up as successful as we can be with a funnel that's ready to accept new customers and any needs they have. We have a wonderful sales motto in our team at Averitt from a distribution and fulfillment standpoint, and that is, we're not going to build solutions for you. We're going to listen to what you say, and then you're going to create that solution with us, and then we'll blend that into your product. And to me, that just makes for a sustainable supply chain for our customers.
Yeah, that sounds really valuable to have that type of a collaborative relationship with your shippers. Ed, we're about out of time here, but thanks so much for joining us. How can people reach out to you and Averett Express for their distribution and fulfillment needs?
Yeah, you can go to averett.com, or you can Ed Smith at averett.com, either one of those, and it'll take you. There are plenty of links to get you to our distribution and all of our other 4 verticals. It's whatever people need. And the beautiful thing is, if you grab on one of those things, then you can automatically grab onto any of them, and those assets just run. They're just intertwined. We run them all together, and we build benefits off each other. So that's the best thing about it. And I do want to say just thank you for the time. I know I got on here a little late, returned to a phone call, but I appreciate the opportunity just to talk to you about Averett and all our possibilities, and then what's going on in this crazy logistics world we live in regularly.
Hey, well, we all love it. And thank you so much, Ed. And thank you, of course, Mike, for doing this for our audience. You can check us out next week and watch out for the newsletter in your inbox as well.